All right, so I haven't done a video in a while, but at the request of some people, I want to go over range bars and kind of how we've been using them. Since there really isn't that much info out there that I've found on range bars, just kind of that they close like each bar is just the same height, and they close at their top or bottom, and you can filter out some noise with them. Other than that, I haven't really found too much on them. I did find one video about volume and using them with volume. But other than that, there really isn't much out there. So I'm going to go over kind of how I've been using them and how they've helped me take entries at some of these levels that we have. So I'm going to kind of go over kind of top to bottom of everything I'm using to take entries. And we'll go over some trades we've taken and trades that I've seen in the last week or two that have been pretty good with the range bars. So if you don't know, range bars are bars that are not time based. So, like here, this is a 10-minute chart. Each candle lasts 10 minutes, no matter where the price is after those 10 minutes. The candle closes and a new one forms, right? Range bar goes off of ticks. So, like this one right here, this is the 100R. So, every 100 ticks, no matter how long it takes, will close the current range bar and open up a new one. So, each bar here, excuse me, each bar is the same height no matter what. So if it has a tail or not, or it's just a full body, they're all the exact same height. So one thing that I've liked about them recently too is if you're taking an entry on a candle close and you're putting your stop above a high or low, it's going to be the exact same stop loss for every trade, which to me is really nice in the fact that you can have that constant risk per trade. Whereas, if you're waiting for sometimes say like a 5-minute bar to close, right? Say you're taking, this trade right here that you want to short this candle. Well, if this candle closes down here and you're waiting for the break of it, you're risking from here all the way up here. Or say you're taking, you want to take like this drop here, but this candle just keeps going and going, you can miss out on the move. So what the range bar does is it will create multiple bars for a bar like this size, because obviously this is more than what we would filter our range on. And kind of going back to that, what we've been trading and kind of looking at is the 100-ish range for NQ, which is equal to about 25 points, or is equal to 100 to 25 points exactly. And if you look up here in the top right, this is the ATR of NQ currently, which is 225. And I think a good rule of thumb, just from like trial and error and back testing, is you want to set the range bar to about 1/10 the daily ATR. So that kind of filters out some of the smaller moves, but doesn't make it so broad and granular that you don't get a lot of the intraday price action. Like if we go to the 300R, Friday looks like this. Friday is only 4 candles, right? If you go to the 23R on NQ, you're getting a candle, every, what is that? 23 divided by 4, every like 6 points. So you're getting a ton of candles, and it really doesn't help that much. I mean, you can kind of see the trends forming and stuff, and like higher highs, higher lows, things like that. So it may be good for you. I like it a little bit longer. So I've been using like the 100, 102, 104, anything in that range. And then for ES, anywhere from 20 to I think 28 has been good. The volatility on ES is starting to pick back up again. When it died and with the ATR got down to like 40, the 20 range was a little better. Now that it's picking up, I think anywhere from 20 to 28 will do really well. So this is what that looks like on Friday. Like you get these nice moves up, no blue candles going down at all, and then you get kind of some pullback, get a nice bounce right here, move up. So we'll go over all that. But general rule of thumb, 1/10 the daily ATR for the range seems to be a good sweet spot for momentum trades. I think if you're scalping, you could probably go a little less. But overall, I really like the 1/10 type rule. So, and here's what I'm using along with them. So we got volume on the bottom, And to note too, this is everything I'm watching. So I'm watching either the 5 or 10 minute chart here on the left for ES and NQ. I have the 102 range bar for NQ here, the 23 for ES. I have the market internals here. You got the Vold ratio, the tick, cumulative tick, and the add. So those are all in one single spot. And then we did start marking levels on the VIX, and those have helped with conviction on trades recently. So these are the VIX futures. TradingView just got live data for them. It's under the CBOT data. I believe it's like $2 a month. So if you want live data for the VIX futures and using levels, we plot the levels the exact same way that we've been plotting levels for ES and NQ, and they've aligned really well. So I think that can add a little confluence to some of these trades as well. So that's everything I'm watching all at once. I didn't ditch the time-based charts totally. I do think there's still value in them, but I'm taking entries mostly based off of the range bar just because my risk can be the exact same for every trade. And then this can also filter out some of the chop that you can see on these smaller time frames. I do kind of like the 10 minute, 5 at the bare minimum for me personally on the time-based charts. The 3, I think the 3 is good for taking candle entries like breaks of highs, breaks of lows, kind of how we've learned to trade them previously. Failure to go higher, failure to go lower, like break of candle structure. So like if you get a move up into like an area you're looking to short, you get a red bar in the direction, and then you get a trigger once this low breaks, and then that's your entry. So it's kind of the same thing with the range bars where you're just getting in at the close of a candle. At least that's what I've been doing, and found a lot of success with that. So it's a similar entry system. It's just a little bit more simple. So like if you're watching the 3 minute, you get this move up, but here it just looks a lot more clean. It's just straight up. You do get your volume. Notice that the volume that comes in at the top is a lot more prevalent than say these lower time frames. I mean, you do get the volume down here, but here you get the volume up. So that's what I've kind of liked about them too. It seems like the volume analysis that you can do with the range bars is much more obvious, I guess. Like there's more spikes in the, let me go back, oops. There's more clear spikes in the volume to show you, are buyers really active here, are sellers really active, kind of what's going on. So let me go to the 5 minute here. So like you notice kind of like once you get to midday, like there's really not a lot of spikes. I mean, you do get some here, but there's just a lot more prevalent volume on these range bar candles. So let me go back here. We'll go to the range bars and kind of what I'm using. So we got volume at the bottom. There is relative volume, and that only applies to time-based because these relative volume bars are based on the previous average time or at that certain time. So they don't apply to range bars, so you don't need relative volume at all. I do have the DTR versus ATR up here, just to kind of know where we're at. I have been using VWAP and its bands, so they're just these little white squiggly lines here. You got VWAP, and then the second standard deviation band is what you want to use. So I got VWAP, upper band 2, lower band 2. The inputs are from the chart, and high, low, close 3 is the source. And yeah, that's what I've been using. And then the daily high and low. This does not work on the range bars on TradingView. This indicator gives you the previous bars high and low, which doesn't do much for us. So I watched for this on the time-based charts because this is where it actually shows correctly. Also, the pre-market high and low, I have that as well. So that's going to be your green dots, red dots. And then I have this one. It's John Phibbs, London and New York Open. And this plots the opening print in orange here every day. So that way I don't have to do it myself. It just gets plotted automatically and I know what's going on. So those are the indicators that I am using with my charts currently. And all of those are on the time-based charts. For my range bar charts, I only have volume and VWAP. That's it. Because the pre-market high and low can get skewed due to the range bars, and the daily high and low doesn't work. And then the London and New York Open indicator, this one goes based off of candles, so it's not accurate either. So I look at all those on here, and then I'm taking entries here. And so with the range bars, let's dive into them. They're really simple. So you're either going to get a close at the low. So yeah, you're either going to get a full body red or blue candle, in this case, down or up with barely any wick on either side, or you're going to get a hammer at the lows or even at the highs, a hammer type structure, or a shooting star. That's really the only candle types that you're going to see. So sometimes you get something like this where like it's a little bit over, like there's a slight wick, but it's not even half of the actual candle right here, or you get this like chop back and forth, or you get these high volume hammers. So there's not a lot of analysis that needs to be done with these candles, which is nice. And I think that's kind of the main benefit, that it makes things a lot more simple. So just going back, you can see, you know, with this filter of the 102 range, it kind of just gives you the main kind of moves of the day. You know, you got this move up, pull back into VWAP, and then move higher. So I want to preface everything I'm saying first is that these signals that you see on the range bars, they happen all the time. You can see there's different volume spikes all over the place, right? But you want them to be at areas of interest. Areas of interest is the main thing we want to look for. And our main areas of interest are the 1 hour levels. So if you're not at a 1 hour level, or the open, or sometimes pre-market high, pre-market low, or previous day high, previous day low, you shouldn't be looking for an entry. Those are the only places that you should really look for an entry. The 1 hour levels, opening print sometimes, pre-market high, pre-market low, daily high, daily low, and sometimes VWAP. I do like entries at VWAP if we're in like a trend and we get a pullback to it. Say we like hit like one level at 100, we ran up, the next level's at 200, and then we pull back to VWAP at say 50, so we're halfway there. There's no other levels in the way. If I didn't get in at the 100 level where I could have gotten, or maybe should have gotten in, then I'll take an entry at VWAP to target that next higher level. But other than that, I don't think you should be looking for entries at any other or any random spot on the chart. So that's the main thing. If you stick to areas of interest, just drill that into your head and ask yourself that as the first question of, if I'm going to long this or short this, am I at an area of interest that makes sense to long or short, right? And here's an example of the pre-market high actually being wrong. We did actually gap down and we opened down here, but since TradingView does these like phantom bars is what they call them, they're not real, but they just make price action smooth, so it's in the wrong spot. So I'm gonna actually go to this guy right here. So anyways, areas of interest, we're looking for trades, right? So the main trades I like to look for is volume rejections at highs or lows, especially paired with extension beyond the VWAP band. So moves do not tend to continue outside of the band. Typically, they will reject. Granted, there are times where, like on, was it Thursday, when we trended all day, you were outside the VWAP band, but volume started coming in, and really you never closed much past it. Whereas like here, you started closing past it. That would be a good short, and obviously we come back. But what you want to look for is if you're hitting a level. I believe Friday we had one at 280, 13,280-ish right there. And we had a broken one at 190. I want to say 191, something like that. So since we didn't create any levels, and I can actually go to the 1 hour and show you where those were if I want to mark those. We had Got a level here. This was a broken level, so we broke it Thursday, but I still kept it around for Friday because we literally didn't make any levels. So at that, and then I did have this, yeah, 1 hour right there because you have a green to red 1 hour, and then you have this one down here. So those were levels going into Friday. Okay. And then these are the range bars that we had. So first of all, notice how well the levels get respected. All right. Like first and foremost, the level system is what we want to use, and it's what we want to target. So this is the pre-market. Let's see, where do we open? So this, let me go to extended hours. There we go. So this is pre-market. Then we get to 7:30. So we opened kind of right here. So notice we were at a VWAP band, yes, but there was really no level of interest here. Like you may have had an opening print, but I don't like putting the opening print as like a level right off the bat. I'd rather see us dip down into a level or something like that. So this is your open at 7:37. Let's just pretend that that was our opening print. Let me change it to orange per se. I think it was actually a little bit lower. I want to say it was like right here. But that's like our opening print, right? So we got a level down here and a level up here. So you get a dip down. You do get a volume spike on this candle. You do get a hammer. If you weren't so close to the opening print, I would probably take that because you do get an extension beyond the VWAP band and you get a suck up and a hammer candle. I would like to see this on higher volume though. That's kind of like my main issue with this one. Typically I like to see the bottom or top be the larger volume. I wonder if the 100 shows it. Not too much. But typically that's what I'm looking for. I'm looking for a volume spike on a hammer candle at a level that we come into, take it long on the close, and then stop below the candle. So you got a one candle stop, and then you would target the next level up. Because we are under the opening print, I think it's a little iffy and a little early, so I'd probably wait till the opening print breaks. But we did get kind of moved up into the opening print. I think we tagged, I want to say it was like right here. Maybe I'm wrong. I don't know. But it was pretty close like that. And notice that you do get this high volume, like blue rejection candle off of the level, right? Or off of that area. Now, typically when you get a strong body like this, it basically open at the highs, close at the lows, bigger volume than the previous two candles. So this means that there's lots of sellers here, right? So typically if sellers are strong, you're going to see follow through. Now, one of my favorite trades and what I like to look for is like a strong candle like that should follow through to the downside, but obviously we're not going to play it because we're right above a level. I would want this level to break before shorting it. But it should follow through if sellers are actually strong. But the next candle you get is actually the lowest volume of the day, and you push up, 3/4 into the body of this candle. And so this is where I actually took a long. So it was a little premature, but we were bouncing off this level, and I was anticipating that this opening print would break and we would move higher into this 280 level because that's truly the only level that was not broken from the previous days. So these low volume pushes into the body and wick of high volume candles that should follow through are really valid entries. So I would take an entry here, stop below the low, and then target up here. Now, I targeted the high of day mostly because since it was the day after this huge move, I wasn't expecting a lot to happen, and we actually got a lot more movement than I thought. So it wasn't the best R trade, and I probably should have held runners a little further, but I didn't. So I just took it for a scalp. But this high volume push candle or down candle preceded by a low volume candle that goes up into the body or wick, if this was like a shooting star type candle, I think that is a good entry off of a level. Okay, always at an area of interest, right? And we're above VWAP here as well. So notice that was a good trade. We went up, we broke VWAP or broke the outer band, but notice you're not taking a short here and you're not taking a short here, even though you are extended beyond the outer band. It's because we're not at a level. I would only take those entries on extensions beyond the bands at levels. So notice you get up here and notice you start getting a huge volume spike. So this is the largest volume on the day of a 25-point range, and we're starting to get into a level. So what do we see, or what do we call that? Typically that's exhaustion, right? So you're getting lots of people probably closing their longs from down here, and maybe some people starting to short, and maybe some other people starting to buy the breakout that they see, or late longs getting into the game. So that's why volume gets so high on these types of moves that are extended really far, because there's people taking profit, they're shorting. Maybe there's new shorts coming into the market because it's so extended. So that's double the volume, shorting due to profit taking, shorting due to counter trend or a reversal pattern, and late long saying, oh shit, like this is going, I need to get in. So that's why volume tends to spike at these highs. Now, if we were at this level, if this was probably a little bit higher, I would probably take the close of this candle short due to the volume. If not, then I would wait for a rejection from the highs, because then you know that a high is possibly put in. If you're selling the top, you don't know if this is going to keep going, which it totally could. But if you're getting in at levels, then you're a lot more likely to not have that follow through to the upside. So I think this is a good area to take profit from your long before, because you're getting the volume spike. And it's probably a good area to start looking short or looking for signs of a reversal, because you're at a level, you got tons of volume, you're outside the band, and then you can start looking short. So if you did not short this, which I wouldn't blame you, once we start pushing really far up here, I don't think that is a bad short either, because if you're looking at the 10-minute chart as well here, let me change these really quick so they look the same. I was making these a little bit lighter so I could see the volume through them without having to like adjust my charts. If you're like this, you can still see where the volume's at. But notice this 10-minute chart here closes way higher than the VWAP band, and you're way extended, and you're at the level. Like, taking that short, granted the range bar doesn't show it, right? Like the range bar doesn't close at the top, but the 10-minute chart does. And if you've moved, from 190 to 290 in 10, 20, 30 minutes, you're probably going to get some sort of a pullback. So if it's at a level, not a bad place to short. But typically, you would wait for this range bar to close down right here on high volume. I like to see it usually as the highest volume. If not, then that's okay. Not a deal breaker or anything, but you want to see the high volume come in near the highs. So if you were shorting this, which I believe some people did, you would short at the close of the candle here, stop above the high, and you want to target either the opening print or maybe even the next level down below. So I hope that makes sense on the rejections on the outer bands. So you got this nice move down, bear flagged up, and another kind of good entry I like is, which kind of applies here. So notice we had the strong volume down, low volume push into the candle. Exact same thing happens here. You get a move down, you get a high volume. This is like an inverse hammer, but obviously this is a bear flag. You can see that looks, this is very bear flaggy looking. And then you get the low volume drop into the wick. That is another good short, in my opinion, because you're coming off a level. You haven't hit the next levels yet, so you don't know how far this is going to go, but it's probably going to keep dropping. And you get this bear flag look into the low volume push of the high volume part of the bear flag. So this would be another good short, taking a short here. Stop above the high, and then maybe target the next level down. So about 2-to-1 risk to reward. And what's nice about these is it filters out this crap in the middle. So even if like this didn't drop straight down, which it did, it kind of chopped around. If you just have the patience, you have your stop up here, so you're safe. So you got this 25-point buffer, then you would just write it down. Once volume starts to come in at a level, you see it. All right, we got a lot of volume here. We're at a level. I'm taking most of my profit off. Maybe you can hold some for lower, but you're probably going to get a bounce. Now, again, we are in an uptrend, right? We are trending up from Thursday. And you get another high volume spike at the lows right here. So another high volume spike at the lows at a level. You're not at the VWAP band. I like when they're at the outer band. It just helps a lot. But this would be another good entry for a long. If you wanted to take a long, I don't think that's a bad entry at all. So you would take a long position here, stop at the low, target, shit, maybe the next level up, who knows. But you want at least that 2 to 1. So you'd be targeting, something right there. And you end up getting it again. So it's another good entry. So I hope that explains kind of like the outer bands and kind of like the rejections at levels. So you're just looking for volume. You're waiting for the candle close to come in. Unless you're really extended past the VWAP band, then I definitely have taken early entries, like entering up here, like in the wick where, this is another green, but we're really far past the band and at the level, anticipating a rejection. I think that's the only way that I really would want to take an early entry. I would not want to take an early entry on stuff that's in here. I really want to see that 25-point push up or down, because really, like if you're taking this short or taking this long, you have buyers on your side. The past 25-point move is up, so you have buyers on your side. Let me go to the previous day. So previous day, we did have a level at 998 right here, I believe it was. And Tradovate actually showed this range bar a little bit better. I'm not sure why it's not high volume. Maybe it's the 104. I think I was watching the 104. But yeah, even that doesn't show it that well. But Tradovate actually had a volume spike on this range bar right here. And so what I saw was market context first and foremost, right? Areas of interest only. I saw this. We had a trend line coming down that I had been talking about for a while. And then broke above it, and then we pulled back to a level here, and it did show volume here. This doesn't. That's kind of a shame. I took this on my personal account, but I actually got long on the close of this range bar here with a stop under the low. And so the confirmations I had were this trend line breaking right here, making higher highs or higher lows here and higher highs actually. We were at a level and we were at VWAP right here. So my thought was, if this doesn't hold, then we're going to be moving down. So I did take an entry here on my personal account. I did not take it on the evals, but I went long here with the stop below the low of that bar, and we did have a level at 13, like 100, like something right here, 1395, something like that. So those were our 1 hour levels we were working with. So this is actually in the pre-market. This is at 6:30. I got long and just held. The open was kind of right in this area. So we chopped around. And I was kind of waiting to see if there was something else that I could take, because we were above this level. So if we were going to dip into this, I was definitely looking for another entry long for my other accounts. We never got it. And then we did get, I don't know if it was this one or this one, but either one I think is a great entry to take long. And why is that? You get the volume spike. So you come into VWAP here, but you bounce off of it by 25 points. This one, I think this one may have been my entry, but we came into VWAP again and bounced on high volume. And so at first I was looking for this to bounce into here, come to the level, and then bounce again. But we didn't. We got this high volume hammer like twice, basically, like after 4 bars. And I took this one long. Took this long with a stop below the low, below VWAP, and then was targeting this level up here. So got long here, and then I got long here, and then sold everything here. and that was the level. And we actually did have another level at 13,200-ish. And now, what do you get at this 13,100 level? So we saw the entries of the hammers at areas of interest on high volume, right? Those are good entries. What do you have here? You have a high volume rejection candle, right? Where if sellers are strong, this should follow through because we're at a level. What do you get? You get this low volume range bar close into the wick of the high volume rejection. I wish I took that long. I should have, but I had nailed this one. This was about a 100-point trade, and this one was about 60. So both of those were really awesome off the open, and I just kind of sat on my hands most of the rest of the day. I did try taking a short up here, and I closed some for a profit and I closed some for a loss, and ended up like breaking even on it. What I should have done was just stayed hands off, because once we got to this level, we had this volume spike. I think we were outside the bands, but I started shorting kind of up in this area. Actually, this candle right here, this push candle, started shorting here. Got a little bit of a pullback because we were at the level. I was thinking we would at least get one blue candle down. We did not. So I started covering when we came into the level here, and didn't really do a whole lot. Came back, lost on the rest, and then just walked away. So that is one check mark or one plus of waiting for a candle to close in your favor, because if you are squeezing like this, there's no telling where this actually stops. So if you're going to play it safe, I would wait for rejection candles at the outside bands and then take the entry, anticipating that that is going to be the top or bottom 25 points of the move. Because that's what these candles are doing, right? You're not trying to time the top or the bottom. You're just trying to time the bottom 25 points or the top 25 points, which shouldn't be too hard to do based on the levels we use and how we know that they work so well. So that's why I ended up shorting this candle, thinking that we're above the level. We're going to pull back some after this big run, but didn't really work out for me. So, but these type of entries, you get the high volume hammer, and then the push into the wick on lower volume, and then you follow through all the way to the upside. So that was another good trade. Here is another one. So this was Wednesday. The open was right. So we had a level at 950. I know we had a level at 950. And we had one at, I think 13,000, or I think this is the 998 level, something like that. Yes, I think it was like that. And so, and then down below, I can't remember where we had a level down here, but there was something down here. I think it was a little bit lower. So you get your open right in this area, right? So this is your opening candle. Let's say I'm not a big fan of just taking the open. Since we're at a level, I kind of waited. So we came down. We weren't at a level to here. You do get this volume spike and hammer at the lows, but we weren't at a level, so I was not looking for that. And then we came back up into the level, and then we started to chop. So here it's kind of like, all right, what are we doing? And this is where these overlapping bars can get kind of iffy. They get a little tricky when they're really just overlapping one after the other, and there's not really any sort of rhyme or reason to their price movement. So I would tend to stay away from those. But when you get something like that where you're getting this chop back and forth, you want to look for liquidity grabs basically outside of this range. So you have something like this and then something like this. Like this is your range, right? So you're chopped up, chopped down. All right, we came back. We didn't really grab liquidity. Just notice this is super low volume. And then you get something right here where this candle pokes above the range, right? And then rejects on high volume. So again, we're looking at the volume and analyzing what's going on. So we grab the liquidity of the top side of the range, rejected down on high volume. I actually ended up taking this short right here, and I was trying to take it into pre-market lows. That was my first kind of area to look for to get out. So I took this short because we grabbed the liquidity here. We had high volume rejection. We were at a level, and then we were closing under VWAP. So I like that a lot. So I ended up taking that short. It worked out for 2 bars, and it was about a 40-point move, so it was pretty decent. Let's see, take that short. These I would always wait for the candle to close. You got a 45-point move down to the bottom. I think I covered like one lot or something. I should have covered more because we were hitting this outer band. I was anticipating us to break down just a little bit further. But yeah, ended up covering hardly any down here. Should have taken more off, did not. And then notice you get this bounce right here, this high volume bounce. So that also should have been my sign that, all right, this may not be working. Time to just close the whole thing. But if this was at a level, I don't think it was because I would have definitely covered there. If this is at a level, I think this would be a great entry. So taking that long because you just get the high volume. And then you come up into this level, and then you come up here to our top level. And so this was another short that we ended up taking. This was one I actually took an early entry on. And so we had the pre-market high right here, and we had come up, tagged it, and we didn't get a volume spike up here. So I was waiting for the liquidity to be grabbed above the pre-market high, and then I was looking for a rejection of this 13,000 level. And so you get this high volume, like overlapping bar. If we weren't at a level, that may be a good place to go long. I don't like how it didn't grab anything though. It didn't break that low. So this is kind of iffy. But we ended up grabbing the liquidity up higher, right? And then we rejected. Notice that even though it's not the highest volume, it is a pretty decent volume spike from earlier in the day. Lots of volume here. This is when I did end up getting in early on. I think I got in at 13,005. So I got in like right here. That could have bit me in the ass though. I think I really should have waited for the close here, and I may make that a rule for myself. I'm just wait for the candle close. You know, like worst case or best case, you get like an extra 20 points on your trade, right? Like if I timed it up here, yeah, maybe I get an extra 20 points. But I don't get the confirmation of this is closing down back into the range. So that's one issue. I think waiting for confirmation is probably the better deal. So if you did, you would take short there, stop above the high, start targeting, the next area, maybe a little bit lower. And once you do, then you can leave runners and you end up just going down the rest of the day. So another good example of an entry. Here's another one. So I believe we had the 950 level. I think you had 950, you had a 920 as well. And then you didn't have a level here until 840. Like that. So this was Wednesday, I believe, or Tuesday. So to me, these levels are kind of close enough where, this is like a zone almost. So you opened up, let's see where, right here. So you open up chopping, right? Chop, chop, chop. Notice you get this blue bar up that broke the range and then it came back down. Honestly, that's probably not a bad area to short because you did break this range, grab the liquidity, and then came to the downside. But this was just a little too choppy for me to get in. So I actually did not take anything here. And then you do get this really high volume hammer once you break the lows, right? So this one, if you took this long, I would not blame you at all because you're right under a level. Granted, you usually want to be above if you're taking something long. But as an early entry, I don't think that's a bad trade at all. But the thing you need to be aware of is if you get this next candle that does not follow through to the upside and rejects off this level, the this is another one, low volume push into this high volume bounce candle, you need to get out because it's probably going to go the other way or flip. So if I took this long, I would definitely look to flip if you got something like this, if this didn't fall through. Granted, you are in a downtrend, so maybe you're only looking for shorts, you're under the level. If you did not get long here and you see this candle close into the wick on this low volume, great short. So you'd enter there, stop below the high, and I'd probably target down here. I'd target somewhere in this area. But that's a good entry. I did not take that. Instead, we got down here to this area, started coming back, and then this is where I was watching the time-based charts as well, which I'm also always watching those for like signs of buyers and sellers and our typical VPA too. But I ended up taking this bar short. So this was one I shorted because we did come to VWAP. We were pretty damn close. I believe ES did reject VWAP here. We were in a downtrend. I want to say the internals were also fairly bearish. So notice that this is a flag. So that's another thing too. These range bars do show flags really well. So we got bear flag coming in, and now you got volume coming in at an area of interest, which is VWAP here. And volume coming in, you would get short right here and target the next area down. So that's like a 4-to-1 trade there. Now, why would I take that short at the level that we're above? Because this level did not reject very strongly. And if you looked at the previous price action on the day, you were in a pretty strong downtrend. So you had this volume here. So that's why I wasn't looking to take this long, was because the first 20 minutes of the day, you really tried to break this level. You tried to break above. And the second 10-minute volume of the day was the exact same as the first. And they were sellers just selling the hell out of this. Then once you came back and rejected again for a third time, you tried to break it again on really high volume. I was thinking, all right, this is probably going to trend down. So if this 920 can break, you're going to be able to ride this all the way down. So ended up taking that short. I covered a little bit at 920 just in case we were to bounce, and then kind of rode. And then I think I got out at 889. I really should have held. That's kind of my one flaw I think that I need to fix, is just holding longer. But that's a different video altogether. But this would be a great entry, targeting the next area low. Now, if you didn't get in there, another thing we saw was this candle as well would have been another great short, where you get this rejection candle. It's on decent volume. Notice volume picking up into the 900 level here, 12,895 area, volume picking up. The lowest candle of the day is not the highest volume. So that's another thing too, where we've been taught, and like I've kind of taught people, that if you're going to reject a level, you really want the highest volume to come in at the high of the day or the low of the day. That's a lot more indicative of a really strong bounce or rejection. Notice you don't get the highest volume here at the lows, and then you get a low volume close into this higher volume hammer off of a level, area of interest, another great short down into this 840 level. So kind of going through all this, to me, it seems pretty clear that you're only looking for volume to come in at these extremes or like these low volume pushes. So we'll go over to this next day. This is another day where we did have a level at 106, if I remember right. 106, something right there. Take this out. And then I'm not sure where the bottom level was, but we were bouncing, came back up. I actually ended up playing this long at first because we were bouncing, and we pulled back into VWAP on high volume. So the open was, this was the open right here. So the open was here on this candle. You came into VWAP on higher volume, and then you didn't follow through. Like you broke it, didn't follow through, and you get this low volume push back to the highs. I actually took this long right here. So that's where I went long, and I was targeting this 106 area. So I went long, started scaling out there, and then a little bit higher up. I should have been shorting this as well because you were at the level, but notice that you come up higher, you get a little increase in volume, but you don't really get the volume that like the selling volume really come in until this blue candle. So high volume rejection at the level, you could take that short and ride it down into the next level. Um, what I did like about this though, here's another example of the liquidity type grab where you have this range form, right? And you don't break it, and then finally you do break it to the top side. You did hit a high, now you're making a lower high here. And then another big volume bar comes in. So volume comes in, you're under VWAP, area of interest. I want to say that maybe you were at the opening print as well. But to me, that would be another good short to take a short here, stop above the high, and then ride this down into whatever level is next. I think Matt actually took this one long down here. So notice you have these blue bars, and then you start getting these wicks. So this is indicative of a channel forming, right? So you got this channel. And what we kind of know is that if a channel is in the direction of the trend, you want to look for signs of a reversal because this is showing that buyers are in control. This is not like uncontrolled selling. So this is buyers like letting it systematically kind of bleed down, and then look for a volume signal at the low to take long for a reversal. So that's another tip. If you get a channel that's in the direction of the trend, let's see, this is it right here. So notice that you start forming this channel that's in the direction of the trend, and finally you get this bounce and then you go up, right? So we are, let's see where are we at now. Right here, channel in the direction of the trend, you get this wick. I don't think this was a level. I think it might have been lower, but either way, like this, yes, you do get the volume. Yes, it's an inverse hammer, but you're not at a level and you're not extended past the VWAP bands. There's a good chance this is probably going to keep going in the same direction. But eventually you get to the bottom, you let the green candle form. You did wick outside of the VWAP band. You did get higher volume. This is the one I was saying that Matt took long from here. And then you could target, I want to say there's a level here or something, like 26 maybe was a level. I'm not sure. But yeah, you never would have been stopped there. You could have rode it all the way to VWAP. And really, there was no reason to get out on these range bars either. So that's another thing too is these offer really good places to trail your stop. So say I went long here on this green candle, right? My stop's below the low, so I never get wicked out. I'm good. Now we push up here. All right, great. Maybe I put my stop here now. So we're a little bit above break even. We're good. Push up again. Now I can move my stop here. So now we're pretty deep in profit. You know, if we come back and get wicked out, it's still a win. And this is a way to kind of ride the trend. So like even here, if you had shorted this blue candle, this one would have been a great one to trail. Shorted the blue candle, you get this candle close, this candle close. Once you get two down, you know, I'm maybe putting my trailing stop here above this blue candle on my runners because, you know, once you're, you know, 50, 60 points in profit, I probably scale a little bit. But on the runners, you know, if a bar makes a new low, put the stop above the swing high. Bar makes a new low, stop above the swing high. Bar makes a new low, stop above the swing high. So on and so forth until you get like a reversal signal. Now close the whole thing out. So you just, you know, rode that all the way down almost as far as possible. Same thing here. Stop, stop. Maybe here. Maybe take a lot off at VWAP or more off at VWAP. Notice you're coming into this previous support resistance area here. And, you know, maybe you get stopped out here on the runners, but you're able to ride it all the way up. Let me do maybe one or two more, but that's kind of just the entries. Like they're kind of the same thing over and over and over. This is another good one the other day. We had a level. The level was a little bit higher. So this level was at like 13,024, 26, I want to say. But you did have a key level at this 13,000 area. And you do have the VWAP bands here to help you. So we did open We opened right here in this candle. So this was the open right here. You did have a level below, and I think we had an area of interest right here at 13,080. This was kind of a big area for this range. So this 13,080 was like previous support, previous resistance. And one also thing to note is that these range bars really help for support and resistance as well. So you can see kind of where like we start chopping around and stuff. Really good area to show you like where support and resistance come into play. So you did have this move down. I actually, I don't think I took this short. I saw it and it wasn't part of my plan, so I didn't take it. But I wanted to take this bar short, and that's because we were going under the opening print. This did not grab liquidities. That may have been another reason why I didn't take it. But you did have this big volume come in, and we did have a level below that we hadn't tagged during the regular trading hours. So taking a trade into those levels, I kind of like doing. But you did have this really big volume come in. Notice, even from the open, I mean, like this is where the volume comes in, and then you go straight down. But I did not take that. I wish I did. This would have been another good short down into the level and 13,000 area. But what some people did end up taking was you did get below this level. I did end up taking this short, and that was a mistake on my end. Now, why is that? You didn't, so you did come back and test the level, but notice how far extended you are beyond the band. This is not going to follow through to the downside unless it's like this huge trend day that really gets going. So I should not have taken this short on the retest of this level. That was silly of me. Um, so I did fuck up and do that. I even called out that we were extended beyond the band, and I still ended up taking this trade. So that was dumb. But I made up for it on the long, so I ended up taking this short. Should not have done it because we are extended outside the VWAP band, and you're coming up on this 13,000 key level area. Now, you get kind of this pushback here, kind of like a channel forming, right? And then you get the high volume hammer outside the band at a major level. Some people did take this long. It was a great long. Getting long here, targeting this 13,080 area. Now, the good thing about here is if you come back to this level and reject it, if you reject down here, you're going to maybe be break even. But once you start pushing back up, I probably wouldn't keep my stop all the way down here because that's going to be, about a 50-point drop or a 40-point drop to your stop. It's going to be invalid prior to that. So taking this long was a little bit of a risk because you were under the level, but you were at a key level, one that was pretty big support resistance in the past at 13,000 whole level. So I still think that was a pretty good trade. So I think you can have hard rules. Sometimes they can be broken, like taking trades at levels, yes. But if you're extended beyond the band, it doesn't make a whole lot of sense to short that. But you're at a psych level, maybe this is a place where we bounce, right? So taking this long here and then targeting this next level up, or maybe even scaling some at VWAP, and then leaving trailing runners under the previous candle lows, it would have been a great trade. Again, also taking this possibly short here, high volume at a level, another good trade. I believe Tanner ended up taking this long right here, and he got a win on it. So he did have to hold it for a while, but notice you get the high volume shooting star candle right here, rejection. It's above VWAP, bounces off of VWAP, doesn't follow through, lower volume push into the wick. You would take this long with a stop on for low, and you never would have been stopped out. Granted, you did have to hold through some chop and you didn't really get any follow through, so it's kind of a brutal trade to hold, but one that you shouldn't have lost on anyways. I'm going to do one more. This is the previous day. So this one, we did have a level, I remember, because I shorted this level without confirmation and got burned on it. We did have a level at 13,083. And now that I'm talking through this, we had one at 13,083 and we had one at 13,000, I want to say 203 or something. I think it was higher than where we got, but by like 5 points, something like that. So those were the levels. We opened up here, started pushing up, and I ended up I want to say shorting like right here or something. And that was like, now that I'm talking through this with you guys, kind of dumb. One, you're not getting a rejection. You're above a key level that you really would want to see reject first. You're not getting a blue candle in the direction. And you're above VWAP. So bad trade on my part. Definitely a bad trade. So if you waited, or I think even taking this possibly long on the retest, maybe not a bad idea. I probably wouldn't, just because your risk to reward here I don't think is as good as something like more of a pullback versus getting in at the high of the trend, you know. So this moved up, didn't get to our level, but we are above VWAP, we're above our level. We should only be looking for longs now, right? You get a pullback into an area of interest, VWAP, you get the higher volume here on the hammer. You want to target this next level up. You would take this on the close like that, and then target up here. Now, I think to me, I think there's pre-market high right here, or high of day. I'd probably scale a little bit, but this trade would have worked out as well. And notice here too, you do get two of these signals where you get the high volume hammer rejection at not an area of interest, so we don't really care too much about that. And then the low volume push into here. I believe I did scalp this. I had somewhere to be, so I could not hold this for the full trade, which I wish I could have, but I took this long right here, and I took it for a scalp into the high of day. So I think it was like a 1.25 trade, like 1.25 R. So not super good, but it was only meant to be a scalp. And I was kind of trading my loss on the day just to earn some back. So I ended up taking this long due to the high volume rejection, didn't follow through, and then the low volume push into it. And then you have it again here, and then finally you get up to here. At this point, you should be trailing your stop or scaling out some. And then you do get this really high volume rejection candle near the level, but not at it. So this is one that you may have missed out on, or possibly may not have taken if you're playing your rules as like, these are my hard rules, I never break them type of thing. Depending on where this level was, but I don't think we hit it on the day. So, but this signal right here is picture perfect. Like almost the highest volume on the day. The only other ones were these two candles up. Massive volume at the VWAP band near the level, so it's kind of iffy. Maybe you take a half size if you want. And that's kind of where the discretion comes in. But take that, and then you literally sold off all day. And then another one here, you come back to our level, right? Or I didn't realize this either. I'm going back and analyzing this. This is our 13,084 level that we had. You do get a bounce at it, right? High volume bounce, doesn't follow through. So what do? Short. Short that. Nice 2R trade. So that's kind of the entries. I mean, talking about it out loud, like you really are only looking for these high volume rejections at little areas of interest on either on a pullback or like a pullback to VWAP, pullback to a level, or these low volume pushes into the previous high volume candles. Here's another one. I think Tanner took this one long as well. You had the high volume rejection here, low volume push into the candle, took this long here. Didn't get stopped out. It looked like it was going to, but never got stopped. And then I think this target was 165 because you had a level at 191 here and 165 or 167 or something. It's like right here. This may have been 200, but it was something like that. And so I'm not sure where the bottom level was, but this was your opening print-ish right here. So this is your opening print right here. Mark that in like orange or roughly that area. So we're above the opening print. We'd want to be looking long. You're holding kind of above VWAP. You do get this rejection into like high volume rejection. So you'd want to wait and see if we can break opening print. You don't. You bounce off it on a low volume push. So taking that long, even if you put your stop at that previous candle low, you never got stopped out. Here's another great example too of high volume rejection, does not follow through. We are above the opening print. You want to be below it before you short. Low volume push into the candle and then ride it up. And then even before you reach that level or right at the level, high volume rejection on blue, don't get it, low volume push up into the level. Now, if this was me and we were here, obviously I wouldn't take a long ride at this level, and we're also at the VWAP band, but this gives you some confirmation too that if you are in long, you may want to target this next area on your runners, because granted we are at the outer band, doesn't mean we're going to reject. That could be signs of a strong trend too, and you do end up getting that push into the high. So yeah, that's kind of everything that I like to look for on range bars, mostly just the volume and candle structure. And since the candles are so simple, there's really only 2 or 3 candle patterns that you're looking for. So main thing I want to just reinforce is areas of interest only, and follow the volume. Like these are going to tell you where buyers and sellers are coming in. Like here, you get sellers down, some strong buyers coming up, and then strong sellers down again that can't push this candle up. Short that. High volume green candle here that spikes up, doesn't follow through. Low volume push into it, and back down you go. So I hope that helps, and kind of gives some confirmation on what to look for and what to use on these charts. So I hope you like that. Any feedback or questions, feel free to ask. I'm always here to help. I'm excited to kill it next week, so let's get to it. Thanks for watching, guys.